What's up, fam? How you doing? What's cracking? Welcome back. It's your boy D. This is D's Daily DD. Always gonna start by saying I'm not a financial advisor. This is never financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only. And yo, if you're gonna say the pop, don't forget the smoke. You know. Yo, so I know you're like, wait, what? Why is D so happy right now, right? Why is he in a good mood? Well, because I'm gonna lay it all down for you in my perspective and what I'm looking at and what I'm seeing. Always make your own decisions, right? With your income, your investments, your money, whatever it is, right? You got to do your own research, do your own DD. Because I'm not here to tell you to buy, hold, or sell. I'm just here to give you my opinion and my thoughts and some facts, all right? But yeah, so this is gonna be a crazy week. This video right here might be a little bit long because it's the only video I'm gonna probably be able to put up for the week because it's Super Bowl, right? I live in Arizona, and the Super Bowl is here this year. So remember, the Super Bowl is here, and so I got loaded up with hours at work. All right, so I bartend, and this week is a money making week. All right, so I'm gonna be busy with that, but I still, always want to come back, say what's up to my subscribers, and just the past month has just been amazing. Seen the channel grow substantially, and I'm really happy with that. So I'm gonna come back to kick it with y'all and present my theories to y'all. All right, so what's another thing? Yeah, so looking at the data with AMC, I want to point out what I'm looking at and how I think the algorithm is still playing out. Right now a lot of people are, watching Ant's trades and are like, "Yo, man, what's going on?" Right? I thought you were saying 140, and as of right now, he's not necessarily wrong. He's not right in my opinion, but it's still tracking. Okay, so don't forget that. And then I am gonna be just brutally honest with AMC. All right, I don't like the reverse split idea. I don't like the votes, and I just am not with it. Okay, after doing my research, my homework, I know they're talking about paying off the debt and all this, but I'm not really just gonna go into the breakdown of that. That's not what the point of this video is gonna be. But just understand that I'm not with it. Okay, and I've on Twitter it seems like there's a lot of people that are for it or whatever, but on YouTube, if you watch Donahue, if you watch CSI, if you watch I don't know who's another YouTuber that I could think of, myself, that we are not with the vote because we see, that this could harm the retail shareholders. Yeah, it can help AMC as a company, but I came in this for a short squeeze. I did not come in here to save AMC for another 100 years or to be paying their bills all the time or whatnot. Okay, so in my opinion, the CEO could have handled this many different ways and could have done things a lot differently, right? So yeah, this video is going to be about AMC. It's going to be about Ape and a little bit about Lucid at the end. I've still been kind of digging into that, seeing what's going on with that, and I'm going to point out what I see. All right. Yeah, so let's kick it off. Right, let's jump into the desktop screen so we could talk about it. Yo, all right, we back at it. So first off, I do not hold a position in this stock, which is Carvana. I just want to point something out that I noticed. What is going on here is, the market, basically fucked up again, and it's showing. And I'm gonna point this out to you. You're gonna be like, "What?" All right. At least that's how I reacted. I was like, "What the hell is this?" Right. So, Carvana, if you don't know, the short interest is extremely high on it because they're in danger of going bankrupt, from what I know. And the short interest is like 60%, 65%, something like around that range. And I went into the shareholders, section here on Webull, and look what I saw, look what I found. So you see, institutions are holding 103% of the shares, but I again, how can you go over something that's 100%? It's only supposed to be 100% of shares, right? Whatever the float is, and it has like a float of like 95 million shares, I think, maybe 100 million. So the corporation, the insiders own 3.25%. Oh, sorry, corporation, and then insiders own 6.59%. So this is saying the retail doesn't even own any shares. But how do you have 103 by 6? So around 110%, right? 113%. That's absolutely ridiculous. And just wanted to point that out. I thought that was kind of funny. And those people that say, oh, the market is fair, the market does what it does, like whatever. Like, I don't know. A lot of facts, a lot of numbers, a lot of data over the past 2 years, that especially with AMC, that I've seen, like, doesn't point to that. Okay. So let's go on to what I want to talk about here. Just a major thank you to the subscribers. If you've been with me on this journey, you know that I started from zero on everything, right? I started this channel fresh, and look what we've done. We're at 50,000 views, right? Lifetime views, and 566 subscribers, I believe. And I just want to say, thank you, because I do appreciate every single one of y'all, right? I'm trying to grow this channel organically. I'm not trying to buy any bots or nothing like that, not fake subscribers, nothing like that. And the past month has just been, like I said, amazing. I've gotten 3.3 thousand more views than usual. So we were at 6,300 views for the month or so. So that is just amazing to me. Okay. I really like that. So let's jump into this stuff now, right? So Powell, jobs report was stronger than expected, but shows why this will still be a long process. Federal Reserve Chairman Jerome Powell said Tuesday, very strong jobs data released last week simply affirms that the central bank has some way to go on raising rates, right? So they're going to continue to raise rates until inflation comes down even harder, right? It's still inflated, so it's still up there. When it comes to Friday's release of the January jobs data, we didn't expect it to be this strong. So, it's kind of sad because the government sees this as, right now, that there's too many jobs. People are working 2 jobs, 3 jobs, or whatever, because inflation is high. But now that, what this means is like, oh, they need to reduce the amount of jobs, okay? Because there's too many people making money and spending money, right? So that's why they need to continue to raise rates. And on the flip side, that when they raise rates, it hurts the short sellers, because they are borrowing shares. They're on interest, they're on margin, right? So they're on loan. There's interest that comes with that. So I like that aspect of it. But for the general public and the everyday people, or whoever's trying to buy a house or get a car, finance a car, it's going to be way more expensive for them. So that's the bad news. While declining to say whether knowing about the vigor of the data would have affected last week's 25 basis point raise, Powell said, this data shows you this process will take a significant period of time when it comes to tightening monetary policy. All right, that was that. Next, let's talk about the SPY a little bit. We've been pretty spot on. I was looking for this just to go sideways. I actually took a little dip, but then this is a bullish reversal candle from what I know. So then you got this big green candle today, which was pretty wild if we go into the 5-minute chart here, because you got a huge pump. It got rejected. It looked like it was coming back down, and it just rallied into the close, and closed up pretty strong and got back above the resistance level there. So that's where I'm at. I see this channel that it's in, and I believe and continue to see that it's following in this channel. So I expect this to come up to around 427, right? Not financial advice. I'm not telling you to do anything with it. I'm just telling you what's going on here with the chart. And what I see here, right, this is going to be the major resistance, because it got rejected here, had a hard fall. Got rejected here, had a fall, but again, now it looks like it's reversing, right? This is a bullish reversal right here. If it can continue on this uptrend, that will also be good news for AMC, right? Next, AMC down here, guys. I tried to clean up the chart, make sure everything was tight, make sure everything was lined up. So, this is my best guesstimation right now, because I do not have a crystal ball. I cannot guarantee this is going to squeeze like we want it to, but I believe that it will have some kind of pop before the vote. The vote is March 14th, and the day that you have to be holding by is February 8th in order for the vote to count, right? Oh, oops, that was not supposed to happen, guys. But, well, sort of, right? We want to go back to January anyways. So this is the January run, and once we get rejected, like Ants Trades is following, right? We bounce, we break up, we come down, and then we break through, and we have a huge run, right? So pay attention, because I've noticed, this section of this part, right? So that's what I'm trying to point out right now, as well as the RSI. comes up, comes down, boom, goes all the way to 90, 94, 95 on the RSI. All right, we run through, we catch the algorithm catches again, starts to, you know, bounce it around, get rejected, looks pretty much the same, right? So you come down, you go up, you break through, you have this consolidation point right before the last rip that we had, which was in May/June 2021. Again, the RSI, boom, history tends to repeat itself, goes down, rips, right? And we go all the way to 94, 95 again on the RSI. All right, a lot of time has passed. I know that. I've been holding. It was funny on Twitter too when I was saying that I want to vote no. People were saying, "Oh, it's a bot account. He's a shill." Like, it's actually the first time I got called a shill ever, and blah blah blah. But you know, whatever. Like I said, I'm not here to tell you to buy, hold, or sell. I'm just telling you my opinion and my thoughts and how I'm going about it. And I don't like AMC as a fundamental business, to be honest, right? Like I don't care about it in the next 10, 15 years. I'm here to try to make some money off of squeeze play. And the data, in my opinion, is there for a squeeze play. So that's why I'm in it, right? So, okay, now this is where we are. You break down, come back into the triangle, and I wanted to make sure my lines were tight, like I said. So I do believe we broke out of the master trend line. And I've had this box here. Go look at my other videos. You will see that I've had this box here for a reason. Because last time we got rejected here, it was like, if we break through this, we're going to run. But, you know, this was the master trend line, got us back in and whatnot. Okay, so now Ants Trades was like looking at this section and saying, oh, this is it, we're going to squeeze, right? So as far as I can see right now, it is still tracking. It is still normal. Now, it's never going to be bar for bar. Remember that. So the thing is, you know, AMC's chart likes to trade in flags and triangles. We can see it the past 2 years. All right, right now you see this major rip that we had, came back down, consolidated, and now we thought we were going to rip because of the gap and whatnot, but we got brought back down. So where are we at? All right, this is just my prediction, what I think could happen for now in the short term, and we're going to actually use a polyline, right? So tomorrow, I expect us maybe to come up to here, get rejected. You know, the algorithm's just going to slow us down a little bit. And unless the volume picks up, because like I said, the SPY was very bullish today. That can continue. It's just going to bring us up with it, all right? That's what tends to happen. So the first time we come up here, we might get rejected, past that. And then we would probably come back down, and then we can move back up. So I see something like this playing out. Once we can get past the 915 level there, because this is how it happened back then. And the last point here of, oh, great. I was saying, damn it. All right, let me add this again. Let me stretch this out. Sorry guys, it's supposed to happen like that, but that's what I'm looking at. Let's try another poly. Okay, so from here, right, after the 915, once we can break that, that's where I think the big volatility will come. And it's not to say it's going to happen in a day or 2 days or 3 days. That's very hard to predict, but at least we have the resistance points. And then once we can crack 12, then we are looking pretty damn good. And I'm saying that because remember, on August 22nd was when Ape came out, and we had this major gap down. It's not showing the gap here, but there was a huge gap down, right? Because they took some of the value from AMC and they put it into Ape, and that's where the value came from. It wasn't exactly dividend. It wasn't just exactly free money, all right? People are forgetting that they took the money from AMC, part of the market cap, to put it into Ape, even though it's owned by AMC. Both are owned by AMC. All right, so once we hit that $12 level, that's where I could see the major explosion happen to the upside. All right, to how high, I don't truly know. I mean, nobody really knows that. But what I've talked about is using the Fibonacci extension, because that is what shows you the resistance points, and it's made to calculate and give you an idea. So it's kind of, this is the Fibonacci extension that is on this chart right here, and it's showing, right, that it could possibly go up to the $200 mark around there, right? So maybe 160, 180, but it's saying no more than 200, right? Basically. So not financial advice, just telling you how to use that tool as well and what that tool's for. So if you would have used it back in the first run, it measured out pretty close to the top. If you would have used it on the second run, it measured out pretty close to the top. So again, that's where the price target has come up from, the 140 range. You know, the ants trades is also brought up. So I'm thinking max 200. Now, the other thing is, right, with Ape and AMC, they're trading at about a 50% discount, which, as we know, that Adam Aaron has also said that it's not supposed to be like that, right? They're pretty much the same thing. They should be trading equally. So that discount, right, the arbitrage discount everybody talks about is there. But, you know, who's to say that if Ape is at, or AMC is at 200 and Ape can hit 100, right? So because of the 50% discount that we're currently seeing, that's where I'm basing this information off of. Because another reason I'm voting no, think about this, right? So the short sellers right now, from what I've seen, is that they're buying Ape to hedge against their AMC shorts because they're expecting this to merge. So why would you allow them to cover with Ape at a cheaper price and all that, right? So me personally, I want to vote no again, because that prevents them from covering the AMC shorts with the Ape. If it does not merge, then they're stuck with their AMC shorts. Okay. So that's just what I'm thinking about right now. But in the shortest term, guys, we need a bounce so hard right now that we need to bounce off the macro trend line and start moving up to the upside again. If I see that in the next few days, or, you know, the next week, that is my confirmation. And again, if it rejects here and it comes back into this triangle, you know, it's not gonna be looking so good. You know, gotta be honest with y'all. But if I'm tired of this, guys, to be honest, right? It's been going on forever, and I don't like the idea of the reverse split and how they bundled it all together, because I was willing to vote first no, you know, or sorry, yes, no, yes. They bundled it. It's, from what I know, it says that it's all or nothing. You have to vote yes for all three or no for all three. So I'm right now no for all three. And they can always come back and propose something else, right? Something new, a different proposal in a few months. Okay, it's not the end of the world, in my opinion. It's not like they're going bankrupt tomorrow. So that's just where I'm at on the charts, guys. Like I said, I just want to show you that's normal. We're in a normal spot right now where you see this flag right here, and we just need the hardest bounce we have ever seen AMC do. Because it's what normally happens has happened in the past with the squeezes. And normally, I mean, to be honest, right, like, past performance is not indicative of future performance. You got to know that too. But if this thing is on an algorithm and it is on a cycle, then we could expect for this to happen again, right? But you always get that bounce before it rips, and then you take off, right? You get that flag. But I want the bounce right now, and I want to see it start moving back up, you know, in the next few days, to get some bullish momentum. Because right now it's there. The short interest is there, 22%. Again, 0 shares to borrow, 385% cost to borrow. Still very elevated right there. Let's talk about the options chain real quick. For AMC this Friday, you have, at $7, you have 40,980 contracts open interest right now. So if we can get anywhere above that, that's another, let's see, 40,000, 55,000, 60,000 contracts alone, with that up to $8. And after that, right, there's even more at 9. So if this starts to you know, move up with the market, and we start to see some action, I expect it to move very fast, right? And here we are away from danger on the put side at least, because the open interest is at $5, and we're at least holding 6 right now, which is good to see if you're bullish. And we just don't want to see it come down below $5 by Friday, right? That would be pretty bad. That would be a lot of pressure to the downside, and we would lose all of these. Right now, the $6 mark has 61,000 open interest. Okay, so that's what we're holding. We're holding that line at least, which I think is good. I was on Yahoo, and for some reason, the options information is not loading right now. Just disappeared. So some kind of technical difficulties there, like they say, right? You know, it's funny, it's crazy, it's just unreal that dating back to even like the 26th, you get like 0 shares. Maybe even before that, the 25th, 0 shares to borrow. You know, a few thousand pop up, 10,000, you know, 100,000, I think I saw. But you go and see 0 most of the time, 10,000 shares to borrow. But on the short volume, you see half the volume, 56%, 57% volume shorted every day. And it's just like, well, where do they get these shares to short from? It's magical. But right now it's showing 0 shares to borrow as of today. But you know, cost to borrow, and then you know, it's holding. So it's just in chart form. I always like to use this chart. This is the cost to borrow fee. It's gone parabolic. So in my opinion, once we actually see this thing come all the way back down is when the shorts are going to be covering and the price should move up, right? Theoretically. Here we go. So, you know, what the fuck is this? Every single time that we were about to break again this master trend line in the past 2 years, we got halted. Halt here. I remember these, especially this one and this one. Right when you thought we were going to break out, we didn't, and again halted. And we saw yesterday, even though we broke out of the wedge, we still got halted. Now it doesn't mean that we can't explode to the upside. It just means that, to me, in my opinion, that this is controlled, and they're going to let it squeeze when they are prepared and ready, right? And they're only going to let it go to a certain amount. Again, this is not, in my opinion, going to be the MOAS, like a crazy, just uncontrollable thing. I think it's all going to be very controlled, and you got to make your decisions if that happens, when that happens. Now, right now, people are saying, over the weekend, people were kind of freaked out about how, oh no, AMC's not on the threshold list. It still is, right? This is from the 2nd. It was on there, when people started noticing. On the 3rd, it's there. This doesn't report on the weekends, and yesterday we were on it. So as of today, we're not going to know until 8 p.m. Eastern time. 10 p.m. Is it 10 p.m.? 10 p.m. Eastern time, 8 p.m. where I'm at. That's when this thing updates. And it only updates once a day, and we will know if it's still on the threshold list, tonight. Which I'm assuming it is going to be, because there's 0 shares to borrow. So how are they going to get it off the list if there's 0 shares to borrow, right? And then just talk about Lucid, guys, real quick. It's at 25% short interest, still completely elevated. Shorts are attacking. That's why you've seen it cool down a little bit, and the cost of borrow is around 23%. In my videos that I put out, I said I wanted to see it consolidate and hold this support, and that's what it's done. So that's what I've been looking for. I'm not holding any options on this. I'm just doing shares. So we got a bounce right there, a couple bounces, and it's in this channel, and you see it had popped out of the channel, but it came right back into it. So this is pretty much a flag. And we can see another breakup, in the short term, in order to come test the resistance again, unless some news comes out. If they confirm, right, it still hasn't been confirmed or denied if they're going to buy it out. As far as the PIF, you can go check my other videos. But that's where I'm at with it, and hopefully we continue to trade in this channel and come test this $17 mark. Okay, so that's all I got for you guys today. I appreciate you guys stopping by. Like I said, won't be able to make many videos this week. My hours are booked up right now. But we'll be paying attention. If you want to follow me on Twitter, guys, I tweet a lot. I stay up to date on that. And if anything crazy happens, you can expect for me to put some information out on there. But that's all I got for you guys. Thanks for coming back, watching the video. Hope to catch you in the next one.